Chair does see a quorum, so I'll call the State Board of Finance meeting to order. First thing I want to do is I want to recognize the new treasurer, John Thurston, Treasurer John Thurston. So we welcome you to the State Board of Finance. Our goal here is to not have much drama and just to kind of be able to celebrate the great work that you and your team are going to be doing for us. Yes. All right. Okay. So first thing on the agenda is the adoption of minutes for the December 10th, 2024 special meeting. For email to you last week. Let me know if you have any motion to approve.
Second.
Motion to approve and second. All those in favor say aye. Aye. All those opposed, no. The ayes have it. And the next thing we have on the agenda is the presentation of the Treasury investments, and I'll recognize Treasurer Thurston.
All right. Well, good morning, and thank you for, I guess all that you do, and I look forward to obviously learning from you all. One thing I tell newly elected folks: just learn. Stay tuned and make sure we're learning and muting your mics too. Good. So today we're going to talk about our combined results for the first half of fiscal year 2025, and looks like we set another record in earnings of over $200 million for the first two quarters of fiscal year 2025. I'd like to thank the investment team for their hard work. The investment team has been there for many years, several administrations, and I believe they continue to do a great job. And so now I want to hand it over to the investment team, starting with Stephen Kilgore.
Thank you, Treasurer and board members. I'm Stephen Kilgore, Director of Investment Accounting. So in our presentation today, I'd like to start with the trend in investment revenues. So that should be slide 2, where we have investment revenues on a month-by-month basis. The deeper slide showing long-term investments. A lighter color one is short-term, over November, December, covering the last quarter. And so for December, long-term investments, when added to short-term investments of 7.9 million, total 33.2 million. The last 3 months combined together comes to 75.2 million from long-term bonds and 24.7 million from short-term investments. Page 3 shows the divisions of income by type of bond within greater detail. The short-term and long-term together came to 99.98 million for the most recent quarter. Within that, the largest amounts of interest earnings were from commercial paper in the short-term segment, and within long-term mortgage-backed securities and corporate bonds within various economic sectors. Alongside the accrual income earnings are ledger income figures, which represent income as cash is received and therefore available for use or reinvestment. Then we continue on slide 4, which shows the split of investment within these broad economic categories. We have short-term investments, mortgage-backed securities, corporate bonds, and government bonds being the major sectors. Then we continue to slide. The next slide shows the earnings trend by quarter, by fiscal year first at the top, and then below that by quarter. Fiscal year 2024 interest income totaled $380.5 million, which represented significant growth over $271.1 million for fiscal year 2023. Further to the right is the comprehensive income total with price changes included. Net income rate of return in percentage term, that is book return, was 3.4% fiscal year 2024, while total return, which includes price changes, was 3.83%. Fiscal year 2025 income so far, that's for the first 2 quarters, has totaled $201.9 million. Percentage terms, book return was 3.55% for quarter 1 and 3.47% for quarter 2. Annualized year-to-date book return is 3.51%. We go to the next slide, page 6 should be. We have a breakdown of the investments, the corporate investments, commercial paper showing its ratings, and corporate bonds by rating. So all of these are in the corporate sector are highly rated, considered investment grade. Portfolio by duration shows a large grouping within less than 1 year to maturity. And next to that, the largest groupings are between 3 and 7 years in duration. Page 7 illustrates the trend in bond yields over recent fiscal years. As represented by U.S. Treasury bond yields, potential gains from investment opportunities have risen over the past 4 years. As investments mature and are replaced, the overall yield on the portfolio continues to move toward current market rates. I would now like to turn it over to investment managers Steve Pulley and Robert Romanek to discuss the portfolio and plans from a strategic perspective.
Thank you, Stephen. Mr. Chairman, Board, welcome aboard, Treasurer Thurston. As the Treasurer mentioned, we continue to show the progress of the portfolio through the result. Another record of earnings for the first half of 2025 speaks to the work that's been put into the portfolio thus far. Mr. Chairman, last quarter you asked about the potential negative impact of earnings in light of the Federal Reserve changing course and cutting interest rates. Since the initial 3 cuts amounting to a full 1%, it appears that they have put a hold on further interest rate cuts and possibly the end of our fiscal year. In light of that, if that's the case, we can look a little bit more favorably at our income for the remainder of the year. The goal of the team is to reduce interest rate sensitivity to the overall portfolio. The segment of the portfolio that's most sensitive to the interest rates is our operational liquidity and the federal funds received during the COVID. Currently, our liquidity profile is $2.1 billion, with almost $700 million of that federally earmarked to be distributed over the next 22 months. Even though this segment took a hit on earnings due to the rate cuts, the long-term component did not. Today, the long-term portfolio is $9.5 billion, earning 3.19%, which is $500 million greater and 0.25% more than a year ago. And the long and the short of it is that growth in the long-term sector should more than offset the negative impact of the Fed's recent decisions. Over the past 18 months, we have reduced our interest rate sensitivity while maintaining consistent duration and convexity profile. As you can see by the last slide, this profile shows the stable returns and income amidst an ever-changing interest rate environment. So we expect steady results for the remainder of the fiscal year unless a major market shift happens. The other bright spot is our money management trust fund has grown to almost $700 million, and for the quarter, Q4, they did $478. So those funds that are able to participate in that, it's a fantastic job. And so with that, I'll turn it over to Robert Romanek for the macro view and let him set the rates for the next quarter.
Thanks, Steve. Morning, Chairman Hudson, Treasurer Thurston, members of the board. With your consent, I'll be setting the new target rate of book return value for the third quarter of fiscal year 25. After lowering interest rates by a full percentage point over the final 4 months of 2024, FOMC members voted unanimously to leave rates unchanged at their scheduled policy meeting on January 29th. This decision represented the first pause of the easing cycle, leaving the Fed funds target range at 4.25% to 4.5%. While Fed Chairman Powell reiterated that an easing bias still remains, a pause this early in the accommodative cycle reflects a significant pivot from last quarter when an additional 100 basis points of interest rate cuts were being forecasted for this calendar year. Strong economic growth coupled with a solid labor market has given Federal Reserve members time to monitor inflation's progress for their 2% target, which more recently has stalled closer to 3%. Additionally, Fed committee members would like to evaluate how President Trump's plans on immigration, tariffs, and taxes may impact the economy before offering guidance about future policy moves. Currently, the forward interest rate curve forecasts less than 2 25 basis point rate cuts for the remainder of 2025. with the first cut pushed back until the second half of this year. Restating their data-dependent approach, we have observed a Fed that is eager to move interest rates lower and will take any opportunity the data offers to resume the easing cycle. Given this dovish bias, we see a probability of steadily declining interest rates in the quarters ahead, albeit at a gradual pace. We therefore are proposing to decrease the target rate of book return value for the January through March period from a range of 3.4 to 3.5% to a new range of 3.3 to 3.4.
Thank you. Before we hear the motion on setting the new book rate of return, are there any questions for the Treasury staff on the presentation thus far? One quick one for me would be just given some of the commentary about market conditions, and get your crystal ball out a little bit. As we look later into fiscal year end, first half of the next fiscal year, would you see some stabilization occurring in terms of the future book rates of return that you would kind of be more holding steady, assuming market conditions or otherwise stasis?
You know, we've seen the rate cuts already start to impact the portfolio a little bit, it's dragging it slightly. We've moved it lower because we think that we'll see interest rates creep down in terms of the ROI for the next quarter, but we're fairly confident that we'll start to stabilize at this point, given the future Fed forecast. Yeah, so we are confident we'll start to stabilize.
You certainly don't let the question, take as a signal of any sort of disappointment or concern. I think the portfolio is performing very, very well. Kudos to staff and treasurer for all the hard work. It's a good number.
Within the management of the balance sheet, do y'all ever consider going longer in a time like this to affect the return?
Well,
Is the allocation kind of where it has to be?
Well, we have, and that's evident by the fact that, as I mentioned, the long term didn't really move. So as the markets are gyrating a lot, and there's been a disconnect between the short and the long term. So as it pops back up, we kind of look for opportunities to invest longer. So we do want to, with the macro view that rates eventually will turn, down. We want to have money put in place with a positive convexity so we can hang on to that income long term. So we're looking to take advantage of that.
The portfolio is an opportunistic portfolio. Luckily, for us, that we don't have to maintain a benchmark. So when interest rates do creep up like this, we do try to push out the duration a little bit, take advantage of that.
Good, thanks. Questions? Other questions? Seeing none, then I need a motion to set the target rate of book return for the January through March quarterly period from a range of 3.40 to 3.50 to the new range of 3.30 to 3.40%. Making a motion to that effect. Motion by Secretary Fiskett and second by Auditor Milligan. All those in favor say aye. Aye. All those opposed? Ayes have it. The new book rate return has been set. Any other questions for the treasurer's staff before we move on the agenda? All right, so we'll move to our quarterly motions at this point. Chairman of the State Board of Finance, I make a motion to the board that no funds are available for deposit in the State Board of Finance certificate deposit program. Second motion.
Second.
Second by Commissioner Marshall. All those in favor say aye. Aye. Opposed, no. Motion passes. As Chairman of the State Board of Finance, I make a motion the board direct Treasurer of State to purchase warrants for the succeeding quarter, April 1st, 2025 through June 30, 2025, pursuant to Act 1088 of 2013, and keep reasonable amounts in demand, deposit accounts, and money markets during the next quarter for the transaction day-to-day activities. Second to my motion. Second by Secretary Fiskett. All those in favor say aye. Aye. Opposed, no. The motion passes. We'll move on our agenda to EBD. Grant, walk through EBD materials.
Good morning, Chair and Board. We will start with the typical formulary recommendations. We have 2 pharmacy formularies to review and 1 medical. So starting in your packet would be the January 2025 EBD formulary recommendations. Most of the changes on this are going to reflect new drugs or new devices that we're going to exclude for the time being, and giving just further review, further time. There are, for January, there's one, the Intala tab, that's about midway down your list. We are reducing the daily quantity limit from 8 to 4. And that's pretty much it on January. Do we want to take these month by month or all at once?
Let's just do it all, let's do it all together.
Okay. So are there any questions for January? Yes.
Just curious, right below where you mentioned the gastroesophageal reflux, I know that is such a common ailment or disease. A little specific information on why that's
Right. So looking at this one, the proton pump inhibitor that are preferred on formulary are no longer being distributed. And this is continuing to, there are compounds that are still available, but these are more expensive than using the granular or disintegrating tablets that we've got. So that's where we have the generic products available, and we're just using that.
there's, as long as there's still coverage for this.
Right, right. There are many other drugs available and options for all of us sufferers to continue utilizing.
Thank you.
Any other questions for January? Okay, moving on to February. Again, these are just some tier changing or exclusions. The first 2, really, there are, these are specific dosages that we're looking at. There are some changes that the NDC will not be available, so we're just updating to follow those. One that I would like to point out is, again, about midway through the Trintellix, you'll see that we have 96 members that are impacted. This particular drug has not shown any improved efficacy or safety. That's why we are excluding it. However, for the 96 members that are taking it, we are going to grandfather them in for life. Obviously, with this type of disease, we don't want to make any negative changes. If we don't have to, we don't. We're really just putting a block in for new people, new diagnosed. There are other alternatives that are more, have better efficacy and safety around them. But we are grandfathering those existing users. On the hypertension, the verapamil, there's 33. Again, those are being grandfathered for 90 days. There are new alternatives. This is a change in the NDC, so we're just keeping up with that. And there are other lower cost alternatives available. Any questions on February? All right, going on to the medical for February.
We'll do the formulary motions
Okay.
first before we go to the medical. Any questions for Mr. Wallace on formulary? I need a motion to approve. Second, please.
I move approve.
Got a motion from Secretary Biskin. We'll take that as a second from Commissioner McLean. All those in favor say aye. Aye. All those opposed, no. Ayes have it. Now moving on to the medical recommendations.
Medical, again, just a reminder, my standard kind of disclaimer with these are drugs that are administered in a clinical or hospital setting. These are your more expensive drugs. These would be new to market that we are reviewing. So we are excluding them in there until there is further clinical data that supports rolling them on or changing from what our current treatment options are. You will see when it says for like Daxxify, cover with EBRXPA, that prior approval, prior authorization runs through our EBRX team, does not default to like a Health Advantage prior authorization or clinical setting. So that's why we put those in place. When you go down and you look at NIPOSI, the no EBRX restrictions, those would follow whatever the Health Advantage policy would state for those particular drugs. So with that, I'd be glad to answer any questions.
Questions for Mr. Wallace on the medical recommendations? If not, I'll entertain a motion to approve.
Make a motion to approve.
Motion to approve by Secretary Fiske. Is there a second?
Second.
Second by Commissioner Marshall. In favor, say aye. Aye.
Aye.
All those opposed, no. Ayes have it. The recommendations are approved. Moving on to contracts.
So we have one contract before you. This is an exciting one, particularly for me, because if it wasn't enough to roll out a new PBM in the first year of your directorship, why don't we rehaul the technology system in your second year? So this contract is for Navitas with an A. I'm trying to figure out a different name to call them so that there's no confusion, but they would be a new technology provider for us and would be responsible for redoing our AR benefits portal system and our administrative systems for EBD. You will see that the contract is for an initial 3-year term and is valued at $12 million. And if it were to extend to the full 7, would be $22 million. Be glad to answer any questions.
Grant, will the system itself primarily benefit employees or be providers and Health Advantage? Who's really the primary user of the technology?
Hopefully all of the above, but it really will be, primary utilizers are going to be our members and our staff.
No relation to the TV.
No, absolutely no relation, no anything, no nothing other than they are named way too close together.
Any questions?
Quick question. So, full support and technology assistance provided, and my mind's going to cybersecurity protocols, things that we know that we're going to have a good vendor, or at least we assume we'll have a good third-party relationship to take away some of that burden from your team.
Absolutely, and fortunately, DIS isn't too far away from us either, and they are responsible for a lot of our cybersecurity and all of that. They were heavily involved in the procurement process for this, so that has been top of our discussions as we've gone through this process. So yes, absolutely.
A full service contract to where you've got plenty of support.
Yes.
Okay. Thank you.
I would take all the support I can.
Grant, do you envision having an app available for?
They probably in the outer years, they did quote us a price for it. To be honest, that was just one bite of the apple too much for right now. But yes, I would absolutely love to have one and have that ease for our members.
Any questions? I'll entertain the motion. Approved by Secretary Fiske. Is there a second? I'll second. Second by Dr. Milton. Thank you, sir. All those in favor say aye. Aye. All those opposed, no. The ayes have it. Any other business to come before the board? Questions, comments, objections? See no other business before us. We stand adjourned. Thank you for being here.